Good day, investors. My name is Chirag.
And my name is Arnav Bharadwaj.
And we are so excited to present Talen Energy stock to you today. Talen is making bold moves in both nuclear and renewable energy, positioning itself as a key player in the energy sector. But the question remains, Arnav, why should Talen Energy be the next big investment?
Well, that's a great question, Chirag. The answer lies in Talen's unique combination of stable, proven nuclear energy and its forward-thinking investments in renewable sources. Now let's delve into the details. Here's the roadmap for today's presentation, in which we'll be going over the overview, investment thesis, industry analysis, finances, internal analysis, and of course, the AI implications for Talen.
Talen's energy stock is currently priced at $199 and with a target price of $284, indicating a 44% upside. The company has a market cap of $9.92 billion and an enterprise value of $12.46 billion with a PE ratio of 11.34 and EPS of 17.67. The recommendation is to buy and hold based on solid growth potential and favorable financial outlook. Talen Energy is a major player in the energy generation and retail market, producing a diverse range of energy from sources such as nuclear, coal, and natural gas. Their total energy generation capacity currently stands at 10.7 gigawatts, which is distributed across various power plants, including their Sequana nuclear facility. The majority of Talen's operations are based in North America, particularly in the PJM and ERCOT regions, enabling Talen to capitalize on high-capacity energy demands in these regions. Talen controls roughly 12% of the nuclear generation capacity in the US and ranks among the top 20 independent power producers.
Now, we recommend buying and holding shares of Talen Energy for the following reasons. First, Talen's $650 million deal with Amazon Web Service to supply carbon-free nuclear power to their Cumulus data center demonstrates significant growth potential. Furthermore, Talen has expanded its energy portfolio beyond nuclear power to include solar, coal, oil, and wind, ensuring reliable energy production even in times of crisis. Talen has also reduced an outstanding 22% of their debt through repurchasing and share buybacks, showcasing strong cash flow and improving shareholder value.
As for the industry analysis, the U.S. electricity market is valued at $400 billion, with a projected 4% annual growth driven by the shift to electrical vehicles and increased demand from data centers. Talen holds 0.833% of the U.S. market share, positioning itself to capitalize on growing electricity demand. Valued at $928 billion, the renewable energy sector is growing at a 6.1% rate annually. Talen's commitment to renewables is reflected in their 14% renewable energy capacity, which supports the transition to cleaner energy and meets decarbonization regulations. Their global data center market is worth $60 billion, with an 8.4% growth rate driven by the rise of AI and cloud computing. These markets provide significant growth opportunities for Talen. Talen Energy is positioned in the top right quadrant, representing a strong balance of high sustainability and operational efficiency, alongside companies like AES, Alliant Energy, and NRG.
Now, Talen has a strong moat based on three key factors. Talen's diverse energy portfolio, including nuclear, natural gas, coal, and wind, allows it to operate at a lower cost than competitors relying solely on fossil fuels. Talen's nuclear operations also face high regulatory barriers, creating high barriers for entry. Talen's partnerships with AWS and PJM interconnection also provide a wide network, enhancing reliability and trust in its energy services. These elements combine to give Talen a competitive edge in the market. Talen Energy's competitive position, assessed through Porter's 5 forces, shows a strong market stance. The bargaining power of suppliers is insignificant as Talen secures significant deals despite their reliance on energy production materials. The bargaining power of consumers is also insignificant as residential consumers have fewer alternatives, giving Talen the price control. The threat of new entrants is insignificant as well due to high startup costs and regulatory barriers, particularly in nuclear energy, which protects Talen from new competitors. The threat of substitutes is low as well, and alternative energy sources grow. Talen's diversified energy portfolio reduces this risk. And finally, the intensity of competitive rivalry is moderate, with competition from larger producers being prevalent.
Now, let's break down the main revenue drivers for Talen Energy. The majority of Talen's revenue comes from the wholesale energy market. By supplying energy to key markets like PJM and ERCOT, Talen ensures a steady stream of income. Talen has secured long-term PPAs with commercial, industrial, and utility clients, including a notable partnership with AWS to support their renewable energy goals and needs. Talen also engages in energy trading to mitigate price fluctuations in the market. This includes buying and selling electricity and financial instruments, which generates additional revenue by balancing market volatility.
Talen Energy's financial performance also shows strong profitability and growth potential. Talen has demonstrated great financial success with a 51.67% ROE and a 48.14% profit margin in 2024. Despite a decrease in revenue due to its higher energy costs, Talen's profitability has improved, driven by investments in nuclear and clean energy, and its AWS partnership is expected to boost this further revenue. Talen has also experienced an astounding 681.86% EPS growth. Additionally, Talen has halved its debt since 2022 to $2.7 billion, stabilizing its stock and positioning the company for growth. With a debt-equity ratio of 2.17, Talen remains financially viable in an industry with high capital costs.
Mark McFarland, the current CEO of Talen, has turned the company into a premier energy company and will continue to make Talen rise the charts. Mark McFarland was appointed as CEO in 2021 and since has expanded Talen into the data center sector, marking a strategic shift to a business model catered around digital infrastructure. He was also key in reorganizing Talen's capital structure to reduce debt and increase asset sales. Some of the major shareholders include Rubric Capital, Vanguard Investments, and MFN Partners. Talen focuses on updating shareholder returns and aims to return approximately 70% of adjusted free cash flow to shareholders, reinforcing its shareholder-friendly approach. Talen is significantly reducing its reliance on coal by transitioning towards renewable energy sources such as wind and solar. They have set a target to cut carbon emissions by 75% by 2030. In addition, by providing clean energy through PPAs, they support the sustainability of others too. The company adheres to rigorous safety standards, meeting or exceeding OSHA's total recordable incidence rate of 0.3. Talen also empowers its employees through various volunteer programs and ensures reliable energy production by adhering to FERC's production standards, especially during large-scale projects. Talen maintains a strong, diverse governance structure, with nearly 40% of the board being women. While Talen's current ESG rating is 46.4, the company is making strides to improve, and we expect these efforts to positively impact their stock performance moving forward.
Some risks for Talen include regulatory risks, as changes in environmental regulations or energy policies could impact Talen's operations. Additionally, price volatility is another risk, with fossil fuels a significant part of their energy production being sensitive to fluctuations in commodity prices. However, Talen's investment in renewable energy mitigates this dependence. Operational risks arise from potential technical issues, plant failures, or even slow transactions, but Talen uses AI-driven diagnostics to proactively address these challenges.
We recommend buying and holding Talen Energy with a target price of $284, representing a 44% upside from its current price. Talen's PE ratio is 11.28, slightly lower than industry peers, suggesting that the company is relatively undervalued, despite challenges in its competitive industry. Using a DCF analysis, we applied a 45% terminal growth rate and arrived at a target price of $284, reflecting the company's strong future growth prospects. This partnership is expected to help boost revenue and increase earnings per share, with a projected 8% annual growth rate and significant debt reductions in recent years. Talen is positioned for substantial future gains. The chart compares the stock performance of Talen Energy, blue, versus Alliant Energy, red, showing a significant 126% increase in Talen's value, highlighting its strong growth compared to Alliant Energy's more modest 30% increase.
AI development is driving significant changes in the energy sector. Energy necessities are growing as more power is required to process AI, increasing the demand for reliable energy sources. The need for optimization is also rising as AI enhances both supply chain efficiency and consumer engagement. Lastly, crisis management is becoming more AI-driven, with proactive solutions helping to address challenges more effectively.
Talen Energy is at the forefront of the energy transition, blending innovation with sustainability for long-term growth. With a bold vision and commitment to cleaner energy, Talen offers investors a chance to be part of shaping the future of the energy industry. Thank you. Good day, investors. My name is Chirag.
And